The market is priced out, and you can see it on this chart here. This is the Fed policy rate implied by the OIS in 2020, and the market has been pricing lower and lower and lower in terms of where they expect the Fed to go. Have we reached the limits of this now, do you think?
Well, we can never tell about the market, but the market, as so often, I think, has it wrong, right? There will be at least one more hike, one more, I would say.
This year?
Oh, yes. Remember, we're not just thinking dual mandate when we talk rates, right? We talk financial stability as well, and there is a financial stability argument for hiking in the United States, where there is some froth in a number of key financial markets, and to discourage that alone, I think a hike would be warranted. And also, we're going to see the undershooting of the inflation predictions probably coming to an end.
Right. The Fed also, in some ways, used to be very keen on telegraphing its decisions to the markets and making clear to the market that this was the direction of travel. But I sense that maybe has changed, and actually the Fed is prepared to introduce two-way risk into the story and maybe actually prepared to let the market play catch-up very quickly.
I don't think that there is a deliberate attempt to use constructive ambiguity to keep the markets on their toes. But yes, there has been much less forward guidance and quite a bit of forward misguidance recently, partly I think because the Fed board is of course sorely depleted now. 4 members after the 30th of October, when Stan Fischer leaves, 3.
Matt Miller.
One of the most important reasons that we watch this, obviously, is because of its effect on currencies. Willem, I've got a chart here that shows the dollar, the spot price in blue, and speculators' bearish positions in white. Speculators are still very bearish, very short the dollar in terms of net dollar futures positions. Do you expect us to see a snapback, or can everybody stay on one side of this bearish dollar trade for longer?
Well, my record in predicting the movement of exchange rates is about as good as a random number generator, but I think this is probably overdone at the moment. Yes, I would expect that the fundamentals warrant a less weak dollar.
Positioning is so extreme. Positioning is so kind of one way against the dollar. I take your point about it being very hard to get an accurate gauge on where currencies are going. But does it feel incredibly asymmetric at the moment in terms of the way that the world is looking at the US?
Yes, I find it hard to rationalize how this kind of extreme positioning comes about. I think starts feeding on themselves and overshoot, and then are followed by a massive correction. And you can probably see something like that at some point. I don't know when.